Morning traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 23rd of October 2018. Stocks seemed to dodge a bullet last night. Buy the dip came in really hard. We saw a break of the recent lows around that sort of 2710 level in the S&P 500, and it fell pretty quickly to about 2692, 2691, depending on whether you're looking at the physical or the futures. I was only down there for an hour or an hour and a half. Got bought off the lows pretty quickly, within 15 minutes actually. Went back to retest. The buyers were there again below 2700, and then it ripped higher. At one point, S&P 500 closed at 2740, but at one point near the close, within about half an hour or so, it was up at 2755, 2756, something like that, before it closed lower. So dodged a bullet, even though the S&P finished down 0.5%, the Nasdaq finished down 0.5%. 0.3. The Dow finished down 0.5%. In Europe, they missed that last hour or so, that ramp up, and then a little bit of a reversal in the last sort of 10 or 20 minutes, so that we've got the FTSE down 1.2%, the DAX down over 2%, the CAC down about 1.7%. Stocks in Milan only fell about 0.9, despite the fact that the EU rejected the Italian budget. The Italians have said this morning, tough luck. We knew that was going to happen. It's written for Rome, not Brussels, or written for the Italian people, I think is what De Maio said. That's enduring. Markets getting used to that. Italy doesn't want to leave the EU. The EU isn't going to kick Italy out of the EU. So how the impasse plays out, besides via the bond spread, is difficult to know. At one point, the euro was under acute pressure, I should say. Back down at 114.30, but again, the buyers were there, and it made a low about 38, I think. It didn't bounce that hard. It's around sort of 114.73, so 40 odd points off the low. Just reinforcing that 114.30 level is really important. The Sterling bounced, and it's at 129.82, so up a tiny bit on yesterday. The Aussie bounced off its low. It's at back at 70.85. It's kind of in a sort of 70.40 to 71.60 range, I think. Kiwi was down a tiny bit, 65.51. Dollar CAD was down a little bit, 0.1%. It's at 130.84 as we wait for the Bank of Canada and an expected rate hike. Gold rallied up towards 1240, but it's back at 1230 now for a not a terrible rally indeed, but still off that high. Couldn't hold above 1234, and certainly 1238 was a bridge too far on a hold basis. Oil, I haven't mentioned oil, utterly collapsed. Saudi said that they're going to pump again, which is what Al Falir said. But as I mentioned in Markets Morning, you've also got the Saudis saying that they'll rebalance the market should they need to, and should supply get out of hand. So you've got to keep an eye on that. But the levels broke. I'm 3 minutes in. I'm going to dive straight into charts. I'm going to kick off with the weekly S&P. So we'll do stocks today, then we'll do Forex, then we'll do commodities, then we'll have a look at Bitcoin at the end. And what have we got? This is the weekly chart of the S&P futures-based CFD. That's a very indecisive week. Now, we've only had 2 days. So that bar is going to look different by the end of the week. Will we be down at 2,700? Or will we be back up at sort of 2780 or something like that? Hard to tell. The weeklies suggest further weakness. When it comes to the dailies, a similar story in many ways. That's an up day. The bulls won, finished in the top third of that bar, which isn't too bad. On the physical, there was a gap open. It got closed, and then we saw it got closed and it ran up into the 2750s before that closed at 2740. Normally, as an old futures trader, when you get gaps like that, it'd say, right, Gary gap fill, gone back and filled the gap. Now we're free to move lower or higher, as it may be, depending on where the move was. So in this case, I'm expecting more volatility, unless or until I see a close below these two lows. I'm not going to get too bearish. If we do see a close below those two lows, I will get probably extremely bearish and be saying that some sort of big dip, sort of 25.50 or something like that, is on the cards. We've already had a big dip, obviously, from the highs. It's just a question of what's going on. We're starting to see buybacks come back into the fray. That might be the support. I think a lot of people are expecting that though. So keep an eye on that. 5 minutes in, I'll start getting moved. So keep an eye on that. We've had one move, we've had that. This doesn't feel like the end of it, but volatility is volatility and volatility clusters. So, I would expect that we'll continue to see decent sized moves. Just quickly on the NAS, similar sort of story, but just not as bad, and didn't actually make a low on that one. There is support there, and that's the dailies. So Dow, you can see that indecision, and we've had a similar move. We made a new low, but finished up here. So on balance, that is positive because it got chased off its lows, but we'll keep an eye on how that goes. In terms of the local market, we didn't make a new low for this run. We managed to stay above it. But for me, 57.30 to 59.30 is kind of the region. If you have a look at it on the 4 hours, what I'd be saying is this region here, this 40, so 45.46 on 5800, and then up to about 55.60 is a resistance zone, and then the support is about 57.95 to 58.05. If it fell down through there, then you might see it in trouble. Obviously, it's going to depend on what China does today. And on that front, we had a reversal, an inside day. So the next big move is we either have another inside day today. Remember, we saw those a couple of weeks back on the developed markets, and then we saw the big expansion. We either have another inside day or one edge of yesterday's range break. So we'll keep an eye on that. My sense, I don't know. The Chinese do not want Chinese stocks, and I know this is the China A, not China A50, not Shanghai or the CSI, but it's also indicative of what's going on. So keep an eye on that. I'm looking at either edge of that red bar as an important lead indicator. While I'm here, I might as well do the DAX. 10.3, so a good bounce back, still in a primary downtrend, still under pressure, and still targeting 11,000 and then 10,000. So the low last night was 11,200. On the day, though, it's probably got some makeup. Like, it's made up because it's futures. It's made up some ground. It could fill that gap. I wouldn't be surprised if it does. So I'd be expecting some sort of run back towards, this really important 11.7, 11.8 region. That would not surprise me at all for the DAX. If we have a look at currencies now, you can see here that euro again found some support at this 114.30 region. Remember, if it breaks out, it goes to 112.80 or at least 113 would be my guess. There's a little trend line you can draw across there, which puts resistance in the 115, sort of 15.25 region, which coincides with this little 23.6. That would be a reasonable level that it could rally to and then run into a little bit of support. We're waiting on the ECB tomorrow night. I've got market PMIs tonight, the flash PMIs, so we'll see how they look for Europe. But at the moment, you've got to drill down to 4 hours to get any excitement, and then you can draw that trend line across there, of course, and you can see where support and the lows come in. Dollar yen found some support last night. That's the 4-hour chart. This is the messy chart. This is not the one that I put in my morning notes. So let's just draw that in. So we had a retouch down here onto this trend line last night. So it found support, bounced back obviously with the stocks, but also in its own right. So 111.95 is support for dollar yen. If it falls through there, then we've got this support down here at 111.60. If it broke 111.60, you got another 100 points in it. Obviously, it's at 112.40, so that's 80 points away anyway. If stocks have another good day, then we can see new. Get back to challenge at this level here, 112.88. We'll have to wait and see on that one. Very much dependent on stocks. Dollar yen, dollar yuan, and stocks are really quite highly correlated. Dollar Sing. I've said the US dollar is not breaking out unless I see a big move in dollar Sing or dollar CAD. You can see we're not seeing that in dollar Sing and in dollar CAD. I know I've broken normal protocol here. We are seeing respect of this downtrend for dollar CAD. Now, will that hold with the Bank of Canada? What will the Bank of Canada do? Will they deliver a rate hike as many expect? Well, we'll see tonight. But it could be a dovish hike. My sense is it's more likely than not to be a dovish hike. I think I'm in the minority there, but we'll wait and see. But this, for me, is a key indicator for all of foreign exchange, or at least US dollar-based pairs. Going to sterling now, and sterling, basically, we've had a break and a retest. So a retest there. So we're going to respect that level. If we get it up and through, pardon me, 130.50 or something like that, then we can see it reaccelerate. But Mrs. May is apparently meeting with the 1922 club tonight, which could be important. So there could be some Brexit headlines. They're close to a deal, but the Irish border issue is still an issue. So we'll have to wait and see how that one plays out. Overall, the momentum's washed out of this a little bit. So for me, a good short-term indicator would be break either side of yesterday's range. And then if you went down on the 4 hours, you might expect it to, have a bit of a little tiny bit of a run, pardon me, back up towards that that trend line. But overall, Brexit seems a harder act to achieve now than it has for a very, very long time during these negotiations. The Aussie is still down. Interesting in the Aussie, the Aussie didn't go down 11 minutes. The Aussie didn't go down with stocks. It did, but not much. And it performed really quite well. For foreign exchange, we were off doing our own thing while equities were having their funk. But the issue here for the Aussie, and I've explained it in Markets Morning, is the market's already short. It's been in this downtrend since late January this year. And what have we got? We've also got a lack of bond pickup. So it's not like this market funk has come out of nowhere and there's all these positions to be cleared in the Aussie dollar. In fact, it's the opposite, as I've shown in Market Mornings. Positions are heavily skewed to the downside, or short, I should say. So on that basis, I'm not going to get uber bearish unless or until 70-40 was to break. So, of course, durable goods and GDP at the end of the week are going to be important, as is the ECB tomorrow night for the Aussie because of its impact on the euro. But we'll have to wait and see. My sense is 70-40's got to break. Otherwise, I'm getting less bearish on the Aussie. And indeed, I cut some structural shorts this morning, which I may end up regretting. But I cut some structural shorts this morning. So I thought that was worth noting with you. What do we got? The Kiwi, of course. We can see here the Kiwi has rallied from its lows and is struggling to break. If you have a look at it on the weeklies, it's had a bad week so far, but it does suggest there is some support cropping in, or as Tom Demark would say, there's a lack of sellers. And that's what we've seen for the Aussie as well. There's a lack of sellers, and that's when things start to turn. Gold, you look at that chart and you go, oh, that's starting to get maybe a little bit toppy short term, even though it's still in a range. So on a closed basis, it's still in a range. Could have closed above 1234. It would have suggested the move higher. It did not. So that in itself is a slight warning. If stocks rally again, we're going to see some volatility in stocks. If stocks rally again, then we'll be back down to sort of a 1210 to 1217 kind of region. At the moment, we got up to 1239 last night. It's hard to see. So you can see that roll over. So we might see it back down sort of 1225 or something like that, back in this range. I think gold in and of itself is recommended in the current environment by a benign US dollar and equity market funks. If the equity market settles down, then gold's luster is a bit tarnished. Copper, still in a range. I've taken that blue screen off so you can get a better sense of it. It rallied back. It was down 1.25% in HTC1 terms, but you can see it's in a range. So I'm not going to gibber on about that. And now we get to showtime, don't we? All right, so a big fall. I've been targeting 64.50. We didn't get there. We got to 65.70, I think, was the low. My sense is it still looks like it's heading lower. I'll grant you, and this is the most important thing about WTI. I didn't get a chance to write it down. Like Brent, it's breaking back below the high that saw us run to the highs. So that, remember this one. This is the weekly we're looking at. That's a full move. That's a retracement. That's a break. And remember the original McKenna. We go to 1.38. That's roughly where we pulled up. Now we're breaking back down. Now I'm not saying 57. I'm just going to say 64, 45, 50 at the moment is my target. Obviously, my style. You get a big move like that, I clear out most of my position and run with the small residual bit. Similar story here. I'm going to do something, and what we're going to do here is essentially say that there's a box. That box there. This has moved it back into the box, the old trading range, which would suggest and could suggest a move back to $70, which is kind of where I think it's going to go. We'll see on that one, and just how far it comes back. Last but not least, Bitcoin, and I'll say adieu to you all. Going nowhere really at the moment. 64, 6,500, big spreads obviously. If you're going to trade it, I'm trading it. I'm not trading it. If I was going to trade it, I'd be trading it short term, 1 hours, those kind of things. Just at the moment, right? That's it from me. I'll leave you. I'll leave this resting on this S&P. That's just the chart. It's a messy chart, obviously, but it's just a chart of volatility. We had a move. We had a retest of the break. We've now retested the lows on a closed basis. We've stayed above them. That sets us up to set up a range. There's going to be more volatility because volatility clusters. We're getting to the back end of the week. We've got the ECB, we've got durable goods, and we've got GDP. That's really going to inform stocks, and in stocks, it's going to inform a lot of other markets. So watch out for the market PMIs. They are influential, more influential than they should be, but they are out tonight for Europe and the US. So back tomorrow, plenty to talk about. Bye for now.